Hey everybody, Signet here with the Bullish Bears, and in this video we're going to talk about Theta. Theta is one that always confuses people and eventually leads people to believe that there's some kind of way to game the system. So what is Theta? Well, Theta is decay. Theta is time. Options that are in the marketplace have time value, right? We've been discussing this through all of these different videos that options have these days to expiration, and those days to expiration quantify into time value. That old phrase, time is money, is absolutely true. And we can quantify what kind of money time represents by looking at theta. If we look at an option that has 30 days to expiration and we compare it to the same option that has 16 days to expiration, if the strike is the same, say for an example, the 410 strike on SPY, we could look at the 410 strike 30 days to expiration, and then we can look at the 410 strike 16 days from expiration, and between those two, we would be able to see the difference in their values based on theta, which is pretty cool, right? So every day, an option has theta applied to it. And if you're the one that sold that option, you make that much money every day. If you're the one that bought the option, you're paying that theta every day, right? So let's go in and take a look at this in a little better detail. Here's 30 days to expiration, and we'll just scroll up a little bit so the numbers are right underneath theta. And we want to look at the 410 strike. So here's the 410, and here's the theta column. And we can see that the 410 call, 30 days from expiration, has a mark of 1260 and a theta value of 20. So every day, at some point through the day, they're going to deduct 20 cents of theta from the value of this option. Usually, the question I get from newer traders is, when do they do that? Because obviously, if you're going to buy it, you want to buy it after they deducted the theta. And if you're the one selling it, well, you want to sell it right before they do deduct the theta, right? So when do they do that? Funny enough, they already had an idea that everybody is going to want to game the system, and so it's a randomized application. We do not know when, at what point through the day, they will apply the theta value. And they made it that way to guarantee, no matter what, that nobody would know when that's going to happen. They actually use a combination of different events to get to the point where that happens. There's volume involved, there's volume in relation to the current open interest. That ratio is also involved. Then there's how many days to expiration, how much activity at the bid, above the bid, below the bid. Those are all involved. And there's even more than that. Most brokers do not like to share the information. It's proprietary. Every one of them uses a different formula for determining when that change event will happen. But it's a formula designed in such a way that nobody could figure out exactly when that's going to happen, even the people that designed it, because it involves volume. And even the people that designed the formula would not know at what point through the day the volume had reached the level that would trigger the change. Plus, it's not just volume, it's volume versus open interest and how much of that volume was at the mid, at the bid, at the ask, above the ask, below the bid. All of these quantifiable features that are incapable of being hacked. All right, so there's no way to game it. Theta is time. Now, It's best understood when it comes to this decay to grasp how the decay changes as we get closer to expiration. Okay, so what I'm going to do here is open up all the strikes. And then I'm going to hide all of the weeklies. So now what we're looking at are just the monthly expiring options in SPY. And we're going to go all the way out 958 days to December of 2024. We're a long ways out. And what we want to represent this far out and be able to ask the question is, what's the theta this far out? Well, here's the theta column. We can see, right, that's theta. And the December 2024 options, 958 days out, have the same value as the January 2024 options, only 622 days out. Those are the same theta values. Okay, so at some point, if you go far enough out in time, you actually get to this point where the theta just kind of levels off, and you get no benefit from going any farther out in time than that. Notice, for an example, the change between December 15th of 2023 and January of 2024, right? They're about 1 month apart, and the theta value changes 1 penny from $3 a day to $4 a day. So we got a little closer in time. We got 1 month closer, and the rate of change was 1 penny. So from here, let's scroll up a little. Now we want to focus on that same December series. So December 15th, 2023, 587 days with a theta of 4. And we look a few months. We actually go almost 185 days, 185 days almost. And how much did the theta change? What was the rate of change in this option? Almost 1 penny. And I say almost 1 penny because you can see some of those options were at 4, and then some of them were at 5, right? So almost 1 penny, and we went 180 days away, and we still just barely had a rate of change of 1 penny. We're going to continue to do this and get a little closer. Now we're 405 days versus 314 days, right? So we could say, yeah, around 85 or so, 80 something days. What was the rate of change? Well, we went from a 5 theta to a 5 theta. We didn't change at all. The rate of change was basically flat. Okay, so at this point, what I hope is starting to sink in is that when you're very, very far out in time, the rate of change in theta value declines very, very slowly. There's a graph that is really popular if you were to Google theta. And in the graph, it always shows this curve like that. What we're still focused on is the flat area of that curve. Because as you can see, it's not changing very much at all. But we're going to continue to get a little closer. Let's actually get into the current year of 2022. So here's December of 2022. It's December 16, 223 days away, and we now have a theta value of 7. So a few years has gone by, and these options theta value is just slightly changed in all of that time. And another thing worth pointing out is that it's a very low theta value. Every day, these options are losing a minute amount of money based on time, Okay, and they're very expensive options. They have a lot of time value in them, extrinsic value. The options near the money are $3,200, right? Depending on if we're one strike in or one strike out, 3,200 plus dollars. And every day that option will lose another $7. Well, if we jump forward about another 80 days, and now we're looking at 132 days to expiration, the theta value rate of change moved 2 pennies. We went from $7 to $9. And if we continue to get closer, you can see we go from 9 to 10. Now look at the rate of change. It's starting to pick up speed. So from here, with 104 days to expiration, changing from that to 69 days to expiration, right? What would we want to call that? About 40 days? In 40 days, we went from a 10 theta to a 13 theta. That's a significant rate of change compared to what we had been looking at. Years had gone by when we were farther out of the money without seeing this much change in the theta. Here, only 40 days went by. So from this point, we're looking at 69 days to expiration, and we want to follow that up to 41 days to expiration. And what you'll notice here, even though, what would we say? Call it 70 and 40. It's a 30-day change, right? 30-day change. And we went from 13 theta to an 18 theta. So the rate of change is increasing. Remember that curve that I drew earlier? Well, it started out flat, right? So the curve really should be drawn something like that, right? Really, really flat for a long time. So let's get a little closer still. Now we're going to focus on the rate of change for an option going from 40 days to expiration to 24 days to expiration. And the option value went from 18 cents in theta to 23 cents in theta. Another thing worth pointing out while we're doing this exercise is notice now that we're much closer to expiration, the strikes that we're looking at actually have different theta values. We've got 21s, 22s, and 23s. When we were very far out in time, all the strikes had the same theta value. So what's that tell us? Well, it tells us that when we get closer to the money, we can actually see the representation of where theta is applied within the options themselves, right? So I'm going to open this up to all options for a moment. And what that ends up doing to us is we see every single strike available for SPY. And we're looking at 13 days to expiration. What I want you to focus on is where's at the money. In theta, at the money is 33. And then it goes to 34, back to 33, then to 30 and 29, and then it gets smaller and smaller and smaller, right? But if we go back to at the money and we start moving farther away from the money, out of the money, it goes from 33, 32, 30, 29, and it gets smaller and smaller. So what this is actually representing to us is that theta on a left to right actually goes from a high to low. If there is a curve in there where the highest amount of theta represents, and then when we go deeper in the money, the theta gets smaller, or if we go farther out of the money, the theta gets smaller. But that the greatest amount of theta impact is very close to at the money. Notice that it is not exactly at the money, right? It's near the money on each side. If we get the rectangle back out, we want to find the highest value, and we're going to mark that out. So that's the highest value of theta right there. From 405 to 409, it's 34 theta. And then on each side, it went to 33. And then on each side, it went to 32. And then it went to 31, and then 30, and then 29, 28, right? And that's That's that representation. The farther away we get from the money, the smaller the theta value. Even though as we got closer in time, all of these theta values got larger, right? Because if we start closing some of these down and we go way out in time again, if we look at these options, 958 days out, and we ask where's the largest amount of theta, it goes from 375. Boy, let's try that one different. It goes from 375 all the way out of the money to 425. Even more than that, 435. So all of those are the same theta. And that's the largest amount of theta in that time frame. Okay, and then it goes from a 3 to a 2 on each side. So theta's representation within the options chain, first, very far out in time, there is a low theta value, and closest to the money is the highest theta value. As we get closer to expiration, all of those theta values begin to increase, but the highest theta value will always be near the money. Okay, so how do we use that? Or in what way does that impact us? Well, if you're trading something like a credit spread, for an example, and you're very far out of the money, the decay on that credit spread, the time decay, will be much slower than the time decay in a credit spread built or held closer to the money. So if you want to see your credit spreads or your sold trades decay faster from the time decay, you would want to position your trade closer to the money. You would, of course, need to be careful with that, because if you get closer to the money, you're much more likely to get hit by price, right? But it still allows us to gauge or demonstrate where that theta value is at its greatest or its most extreme. All right, so I'm going to get rid of the filter now, and we're going to look at these options very, very close to expiration. These options have 2 days to expire, and their theta value, the greatest theta value, is 1 strike in and 1 strike out of the money, and it's at 85 theta. 85 theta. That's impressive, right? From 85, it drops off each direction. So if we go deeper in the money, it gets smaller, and if we go farther out of the money, it gets smaller. And again, it's just representing that bell curve shape, right? That bell curve is something you're going to want to get very familiar with, because it is involved in a lot of things in the marketplace. It's a standard deviation bell curve, and what this is representing for us is where the greatest amount of theta decay exists within the options chain. So that's what I got for you, everybody. I appreciate your time and look forward to seeing you at the next video.